Okay, let's take a moment and look at the disclaimer. This content is for educational, information, entertainment purposes only. Nothing should be taken as a. We are here just to spread the word about how BTA analyzes the markets. This is Rod from BTA, and we are the middle traders. We are not going to get in at the exact bottom, and we're not going to get out at the exact top, but we will make a lot of money in the middle. We are the stock market masters. Okay, today I want to discuss the fact that we are getting non-confirmations, okay, well, we have gotten already non-confirmations with the Dow Jones, the Standard & Poor's, the Nasdaq, those three major indexes compared to the IWM, which is the ETF that tracks, the Russell 2000, 2,000 small capitalization stocks in the market. Now remember, the Russell 2000 it started moving down before everybody else. It pretty much led us down in this market. Before any of the other indexes broke down, the IWM fell apart. Okay, so now let's look at the IWM for a second. If you notice here, let me get the trend line. If you notice here, the IWM is making higher highs. I'm sorry, higher lows. The IWM is making higher lows. I apologize. IWM make a lower low. It made a higher low in the most recent trading action. Okay, we're talking about from May the 12th to now. All right, so May the 12th, it made a low on May the 20th, but it was still a higher low. If you look here, you can see it's a higher low. Okay, the IWM is making a higher low, but that's a non-confirmation with the Standard & Poor's, the Dow Jones, and the Nasdaq. Let's look at the Nasdaq here. The Dow Jones. Let's open up the Dow Jones, and let's look at the Dow Jones. I'm going to expand it so you can see it better. Okay, I'm going to expand the chart so you can see it better. Okay, you see the Dow Jones made a lower low. The Dow Jones made a lower low. You see, it made a lower low. If we take the same trend line and draw it here, you're going to see the Dow Jones made a lower low. I'll make it a little thicker so you can see it. So the Dow Jones made a lower low, but the Russell 2000 made a higher low. That's a non-confirmation. Normally the indexes confirm one another. So you got the Dow Jones making a lower low. Look at the Standard & Poor's 500 here. Okay. It's making a lower low. Let's expand it. So we actually had a first day rally attempt on the 20th for the Standard & Poor's. That's what this vertical line is for. Okay, so we counting now for the follow-through day. But let's stick to this. Let's go back to what I was talking about here with the lower low. So you got the Standard & Poor's 500 making a lower low. Okay, let's leave that line there. Let's minimize it. Let's bring it back. So you see, the indexes normally confirm one another. So you got the Dow making a lower low. You got the Standard & Poor's making a lower low. Now look at the Nasdaq. We're going to expand the Nasdaq so we can see it better. Look at the Nasdaq making a lower low. Okay, the Nasdaq is making a lower low. The indexes normally confirm each other, but we have a non-confirmation with the indexes and the Russell 2000. Excuse me. The Russell 2000 is making a higher low. Now, this is the IWM, the ETF that tracks the Russell 2000. It's making a higher low. That's a non-confirmation. And what's interesting about it, the Russell 2000, the IWM was like I said, the first index to sell off in this downturn. It was the first on extremely heavy volume. Look at this volume that came in as the IWM was selling off. Okay. But now it's now trying to lead the market out of the bottom. It's making a higher low in the most recent trading action, while the rest of the index is making a lower low. Now, I would much rather to see a non-confirmation between the Dow Jones, the Standard & Poor's, or the Nasdaq. Really, it'd be best if you could see it between the Standard & Poor's and the Nasdaq. Okay, where one is making a higher low and the other one making a lower low. That I would like to see those non-confirmations in some of the other indexes, the larger cap, larger, more broader indexes than the IWM. But a non-confirmation is non-confirmation because the indexes normally follow and confirm one another. So is the IWM warning us that the bottom may be in? I've been saying for a while now that I think for the last couple of weeks, I've been telling y'all, I think this market is going to bottom because of what we're seeing in the weekly chart with the Bollinger Band RSI stochastic strategy. We haven't seen these extremes. And also on the market breadth, the percentage of stocks below their 200-day moving averages. We haven't seen these extremes like this. When we see these types of extremes, the market is trying to pit in a bottom. Okay? I've been telling y'all that. This market, go back and look at the other two videos that we done earlier. Part 1 and 2 to this, okay? Look, we have bullish divergences all over the place. We got market breadth indicators showing improvement, showing signs of possible rally. We got the Fibonacci retracements on the weekly chart and the Fibonacci extensions on the daily chart showing us that stocks are starting to bounce at key levels. Very interesting stuff. And now you're seeing the non-confirmations between the other major indexes and the IWM, which was the first one to sell off. Now, something else that's very interesting, I want to show you a chart of ARK-K, the Kathy Woods ETF ARK-K. This thing sold off, fell off a cliff. All right, this was the poster child for the bear market, the correction. This thing had all the large high growth stocks in it. Look at this thing. It sold off like crazy. Okay, but this is not the chart. I don't want to show you the chart of lowest. I want to show you this chart here. Okay, look at here. I'm going to expand this. ARK was over the last 7 days, 8 days here. It's basing. It's moving sideways. It's not making any more lower lows. See that? It's moving sideways. It's not making lower lows. And this is the poster child for the sell-off. You would think that this thing will continue to collapse. But it's starting to base a little bit. It has not gotten back below this low. Okay, and what date was this low on? This is the low from May the 12th. If we go back to our comparison charts of the indexes, what was that low here? We going from May the 12th to May the 20th. Okay, May the 12th for the Standard & Poor's to May the 20th. Same thing for the Dow Jones. Let's go back to ARK. Okay, we got May the 12th to May the 20th. You see that? We are not making lower lows. You figure this thing would continue to sell off, but it's not. Okay. So if this dead dog can, this dead dog can try to stabilize in base, okay, and slow up on the sell off. Well, if this thing can bottom, anything can bottom. Okay, that's what I'm trying to tell you here. All right, if they're going to stabilize and save this dead dog, then anything can bottom. The only thing about this, I will say, all right, besides the fact that it's below all the key moving averages, like all the other indexes, it's below all the key moving averages. But lowest is not even trying. Okay, lowest is not even trying to give us a signal right now. Look, you see, this is the lower level of lowest. It has broken below that now. Okay, so lowest is it's breaking down. All right, so if this turns around, okay, and rallies back up, and we could keep the blue line going underneath price, just like right here, you got the blue line below price as the stock rallies. Well, we got the blue line, but we broke below it today. Okay, we need that. So it's probably gonna have a red line on top of it in the next day or two. But if we could get below price and it stay below price, then and get back above the 21-day moving average, then hey, maybe all can bottom. I'm not saying trade this garbage. Don't get me wrong. This thing is steadily trading below the 21-day moving average. I'm just saying if this dead dog can stabilize and it's showing non-confirmation on the IWM with the major indexes, I'm just saying anything can stabilize. Look, we got non-confirmation on the indexes. Go back and look at the other videos. This market seems as though it wants to bottom. This market is trying to find a bottom. This market is trying to base. I don't know when it's going to bottom. I don't know if it's going to be tomorrow, next week, the week after. I cannot tell you that. But I'm telling you that everything is starting to show that it wants to bottom. It's trying to bottom. It's trying to stabilize. Now we're going to look at the weekly Bollinger Band, RSI, stochastic strategy, MACD strategy, and see what it looks like. But that's our key indicator to tell us when it's time to go long or go long also with the follow through day. So we see we got a follow through day, first day rally attempt on the Dow Jones. We ignored day 2 and 3. So we technically can get a follow through day tomorrow, which would be the 25th, Wednesday the 25th on the Dow Jones. Okay, because we got first day rally attempt. Okay, and the same thing with the Standard & Poor 500. We got first day rally attempt. We ignored day 2 and 3. So tomorrow, May the 25th, we can actually get a follow through day on the Standard & Poor. The Nasdaq is not ready yet, and the Russell 2000 is not ready yet. But we could get a follow through day on the Dow Jones and Standard & Poor, possibly tomorrow or a couple of days after that, because tomorrow is day 4. All right, so we're going to stop it right here. I don't want this to be too long, and we're going to pick it up. Look out for the next video. Okay, take it.